Good morning, ladies and gentlemen, and welcome to the clash of the asset classes, stocks, crypto, and currencies. I've said it before, and I will say it again. When it comes to financial markets, a lot has changed over the course of the last year. There was DeFi summer, there was DeFi fall, Bitcoin boomed, and capital markets have been frothing at the bit across the board. So for this next session, we've gathered a fantastic team of experts, along with our moderator, Mr. John Lewis, who is the co-founder and CEO of Funnel Cross. And they're going to discuss stocks, digital assets, currencies, commodities, ETFs, indices, bonds, and much more. So I'll briefly introduce each of our experts here today. We have Myria Evdokimou, who is the CBDO at EXCA Fund. Wael Makarem, who's the market analyst at ICM.com. Habib Akiki, the senior market strategist at Tradepedia LLC. And Aziz Kenjaev, the SVP of business development at Overbit. Let's welcome them all to the stage.
Thank you. Thank you. It's a pleasure to be here. I think we're all looking forward to getting back to meeting people in person. So I think it's a very exciting topic as we're seeing a lot of trends going on, a lot of volatility in the market. So without further ado, I would like to ask the panelists the first question. So due to the market volatility that we're all seeing in all the different asset classes, what are you both seeing on a retail aspect and also institutional aspect, traders doing? What trends are you seeing? And maybe we'll start with Myria, ladies first.
Thank you, John. Well, I will speak from an institutional standpoint because the EXCA fund and portfolio management is purely for institutional investors. But before I start on the trends, I'd like to just set the scene of what we've seen so far. So we've been in the midst of a global pandemic, and it has disrupted the market as a whole. And so we've gone into the deepest recession probably since World War II. We've had monetary stimulus from central banks pumping liquidity into the market to help kickstart the economy. We've had interest rates fall lower than ever before. We've had the weakening of the US dollar. And on the back of all of this backdrop, there's been some boosting of global trends. The most notable one has been digital technologies, of course. So there's been a digital boom in terms of social media, multimedia, blockchain technologies, online gaming and the likes. We've seen an e-commerce boom. And we've seen some big long-term global trends of innovation and technology like artificial intelligence, green energy, ESG sustainability talks. We've seen energy storage discussions, cybersecurity, robotics and automation. So all of these have been major trends in 2020 and moving into 2021, or at least the start for some of these. And also the crypto boom in 2020, right up until quarter one.
Wael, would you like to jump in there on that?
Well, she covered almost everything. So mainly, as Myria started, 2020 was like an exceptional year with all the COVID in places and people were restricted. So mainly everyone just focused, created new habits just to deal with what we're living. So they had to create like new trends, which mainly were everything related to technology. We saw a huge technology boom since every one of us just got used to a new thing in order to live with COVID. So talking about, for example, Zoom, talking about different softwares that were used as service. So this just made our lives more simpler when you're just stuck inside the room and you can't do anything out and you can continue your business. So these trends were just crazy, and these were clear in the markets. The tech sector was booming in 2020, but as we emerged out of COVID, now we're seeing a pretty good recovery. Like in the United States, we started seeing new trends and going back to more normality. People are excited to go out again, and they're gonna go spend again looking for more into hospitality and stuff. So each era, like in 2020, mid 2020 and going forward, and then early 2021, we had different trends emerging. And going forward, definitely we're going to be seeing new habits, because people also, let's not forget about one thing, all the savings that happened during the past year, they will take also new shape. People will have new spending habits, which we will see throughout the year.
For sure, for sure. And Habib, would you like to jump in there?
Sure. As Myria said, when you talk volatility, the market that stands out is the crypto market. The volatility level of the crypto market is in a different league when you compare it to the mainstream markets. Now, traders have different risk tolerance and risk appetite. So quantitative funds and investors who prefer a steady trend following strategies got hurt by volatility, whereas arbitrage strategies welcome volatility. So to answer your question is really hard, whether volatility is better for retail or institutionals, because volatility or risk is relative. Now, one thing for sure is that the volatility in the crypto market is turning a corner, because institutional investors and big players are investing more in this market with more conviction, let's say. And also we have a derivative, the derivatives market for cryptos is taking shape. And these two factors will basically help achieve a more stable ecosystem going forward.
Definitely, definitely. Just on that point, it's the question is really the trends you're seeing on the retail and institutional traders take. Not so much, because obviously it would, be completely different. So it's really kind of what you guys are seeing from the retail or institutional side, if there's kind of any correlation, or is it completely different?
Well,
so
definitely. If we talk about the stock market, ever since it's dropped 34-35%, the market has bottomed in March of last year, and the S&P is up, let's say, roughly 90%. The Nasdaq more than doubled, and this just reflects the increased interest and participation from both retail and institutional clients. And like Wael said, it is normal to see an increased participation from institutions in the equity markets, but one major factor played a role in the spike of retail activity, and it is the cash at hand. Investors were holding on to cash pre-COVID, and when COVID hit the market, the cash hoarding just spiked. And with interest rates being almost non-existent, it was only normal to see some of this cash finding its way into the market. The bonds market on the other, the bonds market on the other side, participation, although volatility spiked, participation is more to the institutional.
Awesome. Vladis? Thank you.
I agree with Myria and Wael and obviously what they said. The trends though we've seen in 2020 and 2021 were basically in only two asset classes. Those were crypto and equities. We saw a rise in fractional equities. We saw major flows coming into equities because all the other asset classes were basically stagnant or underperforming. We saw what happened with oil. First time we saw it go negative. We saw what happened with bonds. Bonds are not moving much. There is volatility. However, the rates are not letting them move like they should. As Wael said, with cash at hand that many people have now, we've seen increasing deposits because obviously everyone's staying at home.
Yep.
That could cause hyperinflation at some point. Not hyperinflation, but an increased inflation. And if governments, central banks start tightening their policies, then we might have a different theory in how the market will go. Everyone's expecting it to consumption to start boosting prices in everything. However, if interest rates go up abruptly, which we might see, especially since last week's CPI, then we might not have the outcome many are expecting.
Okay, thank you. And to finish, Aziz, on this question.
In 2020, I think for the beginning, we saw a lot of the boom in the retail investors in all asset classes. I mean, first of all in crypto. And then later on where it's discovered that there is, you know, a huge cash inflow in the crypto market and the stocks market, they started jumping into the crypto market as well. We've seen a lot in 2020. I mean, we've seen the boom of DeFi. It was fantastic how it you know evolved in several months. We saw boom in technology stocks, and we saw Elon Musk and Dogecoin, meme coins popping out from nowhere. But you know, no matter how the risky crypto market really is, even though you know there was a huge inflow of retail investors, and then there was a huge inflow later on with you know institutionals. You saw Morgan Stanley jumping in. You saw the trending of CBDCs, and then all of a sudden, when China you know said that we're you know working on developing our CBDC, they partnered with several countries to see the transaction going, and then more institutions got into crypto market as well.
Awesome. Yes, and just because I know we've been speaking quite a bit on digital assets and crypto, on that point, just as a follow-up, and maybe Aziz, you can start it, and we'll just pass it to the right. Due to the extensive volatility, I mean, there's no real other asset class unless you're an official like Ben Bernanke, where you make a talk, you say something, and it moves the markets. But now we're seeing people like Elon Musk just making a Twitter. You know, he changes his tag to Bitcoin, and the market moves 15% in a day. Or vice versa, he decides to sell or not accept, and then it's 30% in a week. So I just wanted your take on that as specialists.
I think there is more than just a tweet of Elon Musk. I think crypto market and Bitcoin especially is getting more into politics. I mean, it's been between the USA and China, because I've been, you know, researching all of these things a lot, and the US seeing a lot of their retail investors. I mean, look at the labor market. No one's going to work because everyone is in Coinbase, clicking the buy button. But you know, they buy Bitcoin, they jump all this cash, and then you see China, they just switch off the electricity, and the hash rate goes down, and you see a lot of U.S. companies, huge companies, they just buy Bitcoin, and I've seen. As for this, I've seen a lot of you know politics involved in the Bitcoins and crypto markets, ups and downs. But and the other point is you know for retail investors, it's something new, and it's something they could get in with no problem. I mean, you can sign up in any crypto exchange with a couple of minutes. You don't need to go through all of this stuff when you go investing into stocks or something. And they follow all of those YouTubers and Elon Musk. Elon Musk is a tech guy. Everyone loves him. And when he said, I'm into Bitcoin, everyone started buying Bitcoin. I'm out of Bitcoin. Everyone started dumping Bitcoin. And who, in the end, suffers is a retail investor. So what I see as a huge solution, there will be more regulations coming into it. And first of all, what we, as the providers of such services need to do is provide education for all of our investors and all of our, clients of our brokerages that we accept.
Yeah, we touch on that point later, but great. And Habib?
As I told you before, maybe volatility is creating the spike in volatility, let's say last year, is creating a once-in-a-lifetime opportunity. Trading has never been like this, at least according to my experience in this field for the last 13 years. I mean, it's
exciting
it's crazy,
times.
Yeah, exciting times. Everyone wants
Depending
to trade.
on which side you're at.
Everyone wants to trade. It doesn't matter. I mean, I'm sure my fellow colleagues from brokers, maybe they would like to flaunt the spike in deposits, account openings, and all this. I mean, the brokerage firm added over 10 million accounts last year. Most of these accounts are from retail traders, yeah? Traders who've never traded before.
Yeah, for sure.
We know from our friends, I'm sure, because we are in the field, we've always getting phone calls from our school.
What should I do?
Our friends and relatives who wants to trade.
Yeah.
But that is only normal, yeah? People want to do the things that they've always wanted to do, but didn't have the time on their hand, right? And the volatility and you know, John, you don't want to hear your friend saying that maybe he doubled his money on Zoom while you are just sitting at home fighting with your wife, right? So it's only normal for this retail activity
of course.
To grow.
Of course.
Okay, so first I'll start commenting about what you just mentioned about Elon Musk. Let's not forget about one thing. When it started with Reddit at first and GameStop just going like crazy on different stocks, the thing is that retail clients suffered a lot during the past time. Well, also always the big money, they're making a lot of money, and always retailers are suffering. So social media just created a new hub to people just to combine and make a huge amount of money and try to fight or try to at least grasp some part of the market. And this was just very obvious since the beginning of the year. And this just also moved to Elon Musk. What if I tell you now Warren Buffett is buying this stock, and you believe like Warren Buffett is a top performer? You'll definitely go buy the stock. But Warren Buffett never went on Twitter and was so obvious and bragging about it like Elon Musk. So this just triggered further amounts of money from all of us. Many retailers, if you know your worth is, let's say, your financials are like $100,000, and you know like Elon Musk is just talking about something and he's trying to pump more momentum in the market. So you just say, let me risk at least 1% of this and just drop it in a certain coin or a certain stock, and then definitely these amounts of money, like I will react, you react, everyone will react, and this will create a certain move in the market. And this threatened Wall Street for a while, for a week. We all remember how everyone was starting saying about the risks of Reddit back then. Now moving to crypto, if we want to look about the retailers and institutional side, where each is finding a play, at least. So retailers, definitely, they're just thirsty for money. And money is also always definitely made on momentum. Since you don't want to just enter in a trade and just get bored and just start asking yourself whether you have to get out or not. You prefer going into something and then seeing your value just spiking hundreds of times. For institutionals now, they're trying to find something in Bitcoin or other cryptocurrencies. They have low volume, there's less liquidity, they can at least try to impact the market with a certain way, and this could be very rewarding to them. And we were seeing this for the past couple of weeks, and it's very obvious. Like when these big wallets, they're just dumping their crypto, for example, we're seeing a huge market movements, and those who are suffering now, they are retailers again. So this goes back also to education. I'll insist on what Aziz said. Education should be a must going forward if people they're considering crypto or others.
Absolutely. Vladis?
I think that Elon Musk and all these people, we had the central bankers before, interest rates, forward guidance and all this. Now we see a shift towards more celebrities, even though they are very successful businessmen, more celebrities speaking their opinion. And okay, there's a fine line between what they're doing and market manipulation, because you can't really pump something and talk your book.
Which is an interesting point, because I mean, if you guys remember in the ICO days, Floyd Mayweather was paid something like $1 million to make a post on a certain ICO, and he got fined for that. Whereas Elon Musk is moving the markets by hundreds of millions, trillions of dollars, and nothing's happened yet. So I guess we'll see how that goes.
Yeah. Also, with regards to what he actually said, with what happened between the US and China. Yes, there are many in the US, especially in politics, that are against cryptos in general, because there's dollar dominance. 70% of the world's cash is in dollars. So the US doesn't want to lose that position. And if they're feeling threatened by something, they will try to stop it.
Absolutely. Politics are definitely taking a big part of this. And Myria, what are you seeing on the more fund side and digital asset classes?
Okay, well, we are seeing a lot of attention from fund managers and the institutional side of the fence, and that's because it's undeniable that the crypto market is now, what, $1.7 trillion market value because it's dropped. So it is getting a lot of attention from these big players, and the likes of Elon Musk and Mark Cuban were just fueling this, the rally in this asset class. And when Tesla, Microsoft, PayPal, AT&T and the likes announced that you can buy using cryptocurrencies as well, obviously everyone's turned their head to see what this is all about. From an institutional standpoint as well, if you see Morgan Stanley has become, in March of this year, has become one of the first big US banks to actually announce that it's offering its wealthy client base access to crypto funds. And this was on the back of client demand asking for exposure to this asset class. We've seen Goldman Sachs relaunch its cryptocurrency trading desk, and BlackRock has also announced trading in Bitcoin futures. So it's undeniable that it is getting a lot of attraction. Nevertheless, obviously, some of the institutional players, the more traditional ones, are obviously a little bit skeptical about that, which I'm sure we'll get into later on in the panel.
Absolutely, for sure. Now, a couple of you mentioned education, which obviously is very important. And we're seeing, I just wanted to get your inputs on how much information you're actually seeing get into the retail market where they're actually able to make real decisions as opposed to just looking at the trends or charts. Maybe, yeah, Habib?
Yeah, thanks, John. Well, at Tradepedia, being leaders in providing financial education to both retail and institutional clients, we witnessed unprecedented growth in demand from both retail investors, but also institutions who want to train their employees and educate their clients. This is just normal, yeah. Everyone wants to trade, as we said, and no one knows how to trade. Now, few traders think that they can do it on their own, maybe by watching a YouTube video on how to trade the financial markets.
Yeah.
But wiser traders came to us looking for proper education. And right now they are actually enjoying the best times to trade. Our retail sales quadrupled, almost tripled on the institutional side. Brokers are looking like they never did before to partner with companies, all education providers, let's say, just to train their client base in order to sustain the space, because newcomers could easily lose their investment in no time with this volatility. So education is growing immensely. We've just partnered with XM Brokers, and we are now running the biggest education portal on the web among all the brokers, I think. 8 hours of live education every day, 5 days a week. So interest is there.
Wael?
So what I believe, unfortunately, many of retail clients with the current market momentum, they're just suffering a little bit because most of these, as someone mentioned at the beginning of the panel, that most of these clients, they had no clue. But when they were left at home and they had enough time to just look into something else, they jumped into the market. Without most of them, they didn't have much of information. So so after that, definitely we have seen increase in demand for education in different asset classes, especially stocks. Many people, they're like talking about retailers, their main interests were prior, if we were just going to look on the bigger picture in the MENA region, they were interested more into currencies, indices, commodities, but now when stocks rallied significantly, and especially small caps, so they went deeply into stocks and they started asking us for more information about stocks, and this And then this emerged to crypto, and now we know there are several ways to invest in crypto, and now it's among their interests. Definitely, everyone doesn't want to miss thousands of % returns in the crypto market or tens of % of returns in small caps. So to cover all this, we went into webinars, one-on-one sessions, also some educational videos, just to try to help our clients as much as we can. Since number one thing, if you're just considering investing or trading, you need to know what you are talking about, what you are dealing with, before just jumping and risk your money in such markets.
Absolutely. Vladis?
In our case, because we deal mainly with professional, well-informed clients, okay, they have access to our analysts, our portfolio managers, so they can have one-to-one sessions with them, but we don't really do so much education because our clientele is actually
on the retail
very,
side.
very well
on
informed.
the institutional side, yeah. And Aziz?
We are working really hard on bringing in education into our, our system and our platform. And what we're really looking forward to doing is working with different educators, because there are a lot of different technical analysis. And with some markets, they work perfectly, and some, we have gun analysis, Elliott wave, Kondratiev wave, and some others. But especially for the crypto, you cannot, right now, due to the volatility, as you can see in a Bitcoin chart or any other crypto chart, unusual wicks, upper wicks and down, the lower wicks. We are working on using different indicators that, they have different names, like the Asian indicator and, East and West, and some other. We want to combine all of those and make like a big educational platform for our users. Because before, when in this market, the huge goal for exchanges and brokers was customer attraction, and right now the major point is customer retention, because what you see is, due to the FUD and due to example of Wall Street bets, you see a lot of people jump in, and then they took the money and then jump out, and then they see that they can earn money in this market. They jump into different assets, and then they lose, and then they just leave.
Yeah.
So we need to work hard on education. So we do not accept that our customers can just jump in, lose the money, and then leave. Yeah. We want to bring the education, so they understand what they're doing. They understand the market, how it works, the money flow, and what the indicators really indicate, and if they want to jump into the market, so they stay for a longer time.
Great. And just to close on that question, Myria, on the fund side, Absolutely. How are you seeing information?
Okay, us, it's not so much about educating the actual investor, because you assume that they have a certain level of education to be a well-informed or professional investor or a high net worth individual or institution. So our focus is mainly guiding the investors in the right direction in order to make the correct selection of asset classes to diversify their portfolio within the fund. So a lot of the time, you have institutional investors and certain classes.
Let's watch your mic. Yeah.
They might. It's not working. So they might like certain asset classes, but they might not be within their risk tolerance profile. They might not be within their liquidity profile. So it's about sitting with the client on a one-to-one basis and really understanding what the client's needs are, what their time horizons are, what their level of risk is, what their level of knowledge is, so we can provide them with the correct product and guide them through their investment selection. Because at the end of the day, it's of utmost importance that our investors do get the returns that they need. We make it, our end goal is to actually generate these returns for the investor. And so we provide them with the different asset classes and explain to them where they
risk-
can
the
invest.
risk,
Yes,
from
the
both
risk
sides.
matrix. It's all about diversification for us in terms of geography, in terms of sector breakdown, in terms of time horizon, in terms of basically every aspect. It has to do with diversification, so you can lower volatility and lower risk in the meantime, but generate a certain amount of return.
Okay, great, thanks. And just to follow up on that, because I think we mentioned a little bit about all this money being pumped into the market. I know we covered crypto quite a bit.
Yep.
So just want to ask the question about, do you guys, are you seeing overpriced and overvalued stocks just because, you know, a lot more money is in the market? So maybe if Myria, you can start that off and then
Absolutely.
we'll just go down.
So central banks are still pumping liquidity into the market in the hope to actually boost investors to move away from safer assets into riskier ones. So yes, there has been a little bit of a stretch in stock valuations. By most valuation metrics, stocks do look at all-time highs. And therefore, we need to look at other types of sectors within equities, for example. So the growth stock, the techs, are the ones that were the pandemic winners of 2020. Now we're seeing a slight correction. We haven't seen the full correction, but we are seeing a market rotation, as my fellow panelists have said. So with that, we look more to value investing. So value investing has been underperforming in 2020 and has been sold at a deep discount compared to its growth counterparts. Now with the rotation, we're starting to see that it might be good potential, good growth potential to actually invest within value cyclicals, including energy, select financials and industrials, in order to have opportunity for growth within the portfolio. We know also that due to inflationary pressures, and there's so much talk now about inflation rising more than expected, we know that cyclical stocks tend to do better than other types of stocks in times of inflation. And so having cyclicals and value stocks within a portfolio could provide good hedges against inflation.
Okay, great. Vladis?
Yeah, I completely agree with Myria. There are gems anywhere you look, in every sector. There's stocks that are undervalued, stocks that are not in an ETF, for example, because they're too small. ETFs obviously have seen a lot of money being pumped into them because most people are passive investors.
Yep, that's true.
But yeah, growth stocks, I agree with you. And also, there are new sectors that are being formed that were not there before. We have the industrials, we have the tech, but now even with blockchain and DeFi is gaining a lot of traction, and I believe that's a sector everyone should look into.
And I think even from the retail side, I'm seeing a lot and hearing a lot about real stocks and the difference between real stocks or CFDs from the retail side. Is that something you're seeing also in exclusive capital?
Yes, we are seeing a trend towards real stocks, especially fractional stocks. You can see that from, for example, Robinhood. Their volume skyrocketed. They're low cost, but we offer the same thing. So we have been pushing a lot in that area instead of, okay, obviously we offer all the CFDs, but the real stocks and the fractional stocks are something we're seeing a big
demand
trend
for.
in.
Well?
Okay, if we have a look at the metrics, we can see that the leaders of 2020, they are laggards now.
Yep.
And this also could create some opportunity for investors. But if I'm an investor now and I want to look at how I'm going to invest in 2021 and going forward, I have to split my vision in two. First, we have the cyclical or the rotation after what happened in 2020 and emerging out of COVID-19. So we can look here for financials, for energies, and also if we see the latest spike in commodities, we can go to industrials. And also people who will spend going forward, they'll be looking for hospitality, airliners. These are good to just emerge out of COVID-19. They could create some values. We can check these values. Relative strength is supportive. If we look also on the economic recovery, also inflation inflation, all these they could support in this. The overvalued stocks at a time when central bankers, they're going to move back again to tightening monetary policy, these price extensions, they're going to come back to certain pretty good norms to invest again. So always that's continuing for a long time in the US markets. Buying the dip, it's just always there. When the PEs, they're back to somewhere normal levels, there's a new entry. And if we want to look at the other part of investments, if we're looking for new emerging industries going forward, like my colleague said here about DeFi and blockchain, we can also add there are many industries that they're emerging due to technology. So we can look for artificial intelligence, which is now everyone's talking about self-driving cars, about healthcare. So it's going
trending.
more into this. We can talk about virtual reality, which spiked during the COVID with gaming, all gaming with virtual reality. Also, the big data analytics, most companies, they're moving to this direction in order to have better decision making. With this, we can talk about, since we're relying more on technology, we need to look for better security. And if you heard Bill Gates recently, his main concern is cybersecurity. And we heard about the attack lately with Colonial. So this also could create, since we're expanding technologically, we need definitely a proper security, which could create good investing. Also, we can mention other two, genomics. It's going to be the future. It can shape up our lives with this new science. And finally, with Biden's plans of decarbonization and US joining again the Paris climate, we can talk about renewable energies, which are expected to, at least the sector, to jump like 5 times within the coming 10 years. This could create a good investing opportunity on the long run. So definitely you need to just mix your portfolio with ones to recover from the COVID and the ones that could be long-lasting.
Somewhat diversify. I was actually reading that some of the largest, if you took all the US airlines or some of the largest, Zoom as a stock was more valuable than I think the top 4 or top 5 airlines. So it's pretty crazy when you think about that on that perspective, right?
Yeah, at the time, this is just it means how people they're behaving with money.
Yeah.
It's not about only the company. Like just a small example for what you're saying. If you look at Moderna, which created a vaccine that's life-changing, its value grew like 10 times since they found the vaccine. But if you look at Doge, it's just a joke coin. And because of Elon Musk,
but I think the CEO was selling some stock there too. So you never really know what's going on.
So this just proves your point. It's about how people they're behaving in money and not.
Absolutely.
But you're right. You're right. It's about market disruptors. They're gaining so much attraction now, and so everyone's
jumping
in. Yes.
Habib?
Thank you, guys. Yeah, you left nothing for me to talk about. I can't agree more with all of what you said. But I want to highlight one fact that since 2017, we are hearing overvaluation, and the market has maybe more than doubled since then. So the market doesn't move based on valuations, and we all know it. The sentiment is there. I believe we are in the early stages of the bull run. We are witnessing the best first year of a bull market ever. Now this means that a big correction could be
on the horizon,
on the corner, but I'm still very bullish on the equity market. I believe that the economic environment and climate is optimum for risky assets. The markets are enjoying unprecedented monetary stimulus. Fiscal spending is about to increase by few trillions. Personal savings rate among Americans reached a high of 32%, which is a record last month. People have cash. They want to spend this cash. Inflation is on the rise. The virus spread is decelerating while the economic recovery is accelerating. And the best of all is that the Fed is sticking to his narrative, and they don't want to implement anything sort of tightening. So this is the perfect recipe, let's say, for growth in this market.
Absolutely.
Now, broadly speaking, like Myria said, we could see a shift into more value stocks and cyclicals. And if you want to go more details, promising sectors post-pandemic could be banking, airlines, hotels, also retails, energy, and commercial real estate. And just add one more thing here is that I think if Biden's capital gain tax is passed, we could see a big rotation into high dividend yielding ETFs and stocks.
Awesome. Thank you. Thank you, Habib. And to finish with Aziz, last question.
Yeah, I think the stocks are overvalued, like a lot overvalued right now. The reason why is because of the availability of, we have Robinhood and eToro fraction stocks, and then everyone just pumping in the money into the stocks, whether they know what they're doing or not. You see, the example is, Wall Street Bets, group of guys from Reddit just pumped AMC, which was closed for a long time, and they just pumped GameStop. GameStop, you don't see anyone buying, a CD or DVD like games anymore. But it's the availability. And then in the crypto space, what you see right now trending a lot is the synthetics. A lot of exchanges are adding Microsoft, Tesla stocks. The reason why, because they're overvalued. And then if you look at the overvalued stocks, you see the stocks that you look around, you find that, Apple, and then you find Microsoft. It looks like, when the retail investors who are jumping in using Reddit or social media, they just buy the stock without any fundamental, or knowledge, without experience, but using all of those signals they get from the social media and just looking around, they see, what is the iPhone stock? Oh, it's Apple. I'm buying Apple because I like iPhone. Yeah. And there is, it's a huge bubble right now and overvalued.
Awesome. So we'll be seeing some exciting stuff to come. We'll be monitoring it daily. We have, I think, 5 to 10 minutes for questions to the audience. So, okay, there's a question over there. Thank you.
Hello. This is just to carry on from Aziz. You mentioned the link there between stocks and cryptos. I'd like to hear everyone's opinion on the feeding of retail money from stocks into the crypto market from things like Wall Street Bets, and then obviously Elon Musk and meme coins and things like this.
Using the social media, when you see the so-called success story of Wall Street Bets, and why that happened, because the availability of Robinhood, crypto market is, exchanges are more open into it. You see a lot of big, groups that are pumping into Reddit. One of them is Crypto Moonshot, and which is, I call it dangerous, to be honest, for retail investors, because there are, whoever can post, buy this coin, buy Shiba, buy, a Shepherd, buy, Puddle coin or whatever, CAD. There is a danger. Did I answer your question?
Do you think there'll be a stronger link in future from crypto back into stocks?
Yes, of course.
Yeah.
Yes. Yeah. I will definitely, there are a lot of, first of all, there will be some regulation into it. But, the diversification of any exchange or any brokerage, that it will happen. It will happen really soon. And we will see not only selling the synthetic stocks, but within the crypto market, trading crypto, you can buy also regular stocks. There will be a link.
Any other questions from the crowd?
Yeah, I just have a question about, for Habib on the education side of things. So it's obviously easier than ever to access the markets. Robinhood, crypto's 24/7, 365 days a year. What does an educated retail trader look like? And do they come to you after they've lost money? Is it to learn some fundamental, is it the asset or the instrument they're trading, the time frames they're trading, and how do you balance that out with their actual risk appetite for entering the market in the first place? And yeah, so just what does an educated retail trader look like?
Well, interestingly and surprisingly, it might seem that traders who tend to lose money don't tend to seek education after they lose this money. They continue the hard way. Only few of this category basically is wise enough to go back and look for the reason why they are losing, and basically go ahead with this path. Usually, most of our clients, and I'm surprised in this last 2 years, we've seen a lot of big investors, not big investors, let's say big business owners, They want to enter this field for retirement purposes, for extra income, and they are very serious. So that's why they came looking for education before starting their career. I think now we don't only teach technical analysis, but we teach people how to trade properly. Of course, we tackle fundamental analysis. We focus a lot on technical analysis because active trading, basically, you need technical analysis. We also focus a lot on psychology and money management, which is the most important aspect of trading nowadays. Whether in cryptos, leverage is a killer. Is a killer in the forex market. So when you talk about leverage in the crypto market, you'll be taking volatility of 100%, multiply it by 10, 20, 30, 50 times. Recipe for disaster.
So you, in the theory, the market is the best teacher, as in they actually come to you before they've lost their money.
Sorry?
In terms of a retail into the markets, doing 20x leverage and losing their collateral, they're coming to you before they actually lose their money to get educated on the trading.
Exactly.
Yeah.
Exactly.
Yeah. And do we have, I think time's up, but do we have one last time for one last question? Maybe? Okay, or maybe just a final comment from each of you. Myria, start us.
Right. My comment is basically very simple. You have to know what type of investor you are first, know your limits, and be able to invest accordingly. And diversifying your portfolio is key nowadays. We've seen it time and time again how investors lose money because they're overexposed and too much allocation to one type of asset class. Cryptos is the hot topic, but it's not for every investor, and large institutional players have some mandates with restrictions, and therefore a crypto investment wouldn't be the best investment for them and their risk profile, for example. You just have to know to allocate properly, allocate accordingly, so you can lower your volatility and lower your risk at the same time. Unless you're a super aggressive, with an investor with a huge aggressive tolerance, then you allocate to one direction and that's it. So diversify is key.
Thank you. Vladis?
Yeah, I agree with Myria. Also, we've seen during this lockdowns and everything that everyone had the extra time to do it. They could trade, they could sit on a computer, click buttons. You have to diversify, but also you can make a case for professional portfolio managers. You can make a case for professional funds that you can invest in. Now we see the minimum required deposit being much lower in these types of funds and portfolios, so that might also be an option in case you don't have the time, let's say, to educate yourself or to actually go and trade by yourself and learn.
Thank you, Vladis. Wael?
So first of all, knowledge. Always you have to just increase your knowledge with everything you do, whatever investment you're looking for, whether it's financial investment or any other investment. You need to know about it. You need to study it well to know the risks that's surrounding it. So this comes number one. You need to know what you're entering. The second, you have to assess your financials. You have to assess your risk profile. You have to see how much money you can afford to lose before coming into any investment. Especially now, since we are in a non-yielding era, we can call it. Many people, they're just seeking any yield they can get, whatever thing. Many clients, they're just contact us every day. I want to make money, but they don't want to spend the effort to learn how to make money, or at least how to invest properly. So this could be catastrophic for them. So
Habib, I think you see smiling.
Send them to Myria.
So these are the two edges. It's either you have to seek advice, proper advice, in order to be on the safe side, or you have to go just to funds in order to let someone who knows his thing do the job.
Thank you, Wael. Habib?
Well, with the hype right now in the crypto market, I have just one advice for everyone who wants to trade or invest in the crypto. Invest in through crypto exchanges, and invest and don't trade cryptos. We as professional traders, volatility can kill us. So how about a retail, a newcomer?
Of course.
Just take a small amount of your funds, invest them in few coins, read about them. It's not very hard, and forget about them for 5 years down the road, 10 years. You could make a huge return on that. But if you want to trade in and out, you will miss the boat. At one time you will close, and then the next time you want to buy will be 10 times higher.
Absolutely.
Another advice is to always refrain from using leverage. Don't exceed the 5-to-1 leverage ratio. And if you don't want to learn how to trade before trading, stick to a passive investment, like put your money in a fund. Just don't keep it in the bank. And that's it.
Thank you. Hope there's no bankers here. Aziz? They know it too.
First thing I want to say is to follow the trend, whatever is something you're looking on the chart or the trend in the technology. Disbeliever or skeptic about cryptocurrency, skeptic about decentralized finance. Decentralized finance has showed us a lot that we haven't seen before. You can see it's a metaverse somewhere which has its own economy, and it has so many, complicated but easy to accept products, which, we cannot deny. It's perfect, amazing. But the second is educate and stay away from the FUD or learn and watch the market. I've seen a lot, the Signal or whatever providers, they just say Bitcoin is in the deep, we are buying the deep, and then when the deep gets deeper, you never know. So always educate, learn the market, follow different strategies. Do not jump in with the funds that you got. Allocate your money, and then learn about risk management. And only when you're ready, you can jump in. Of course, I agree with Habib. Leverage is a killer. Do not use leverage. I would say start with trading. The best part of trading is that you can put stop loss in futures. So that you put stop loss, you lose $5. But when you jump in highs, like a lot of retail investors do, and then right now you see your $100 turn to $2.
And that's the thing. A lot of retail traders don't even know about stop loss or how to set it.
Of course.
So thank you. We have to finish. Thank you very much, Aziz, Habib, Wael, Vladis, and Myria, for all your insights today. Thank you very much.
Thank you, John.
Thank you very much.